Hey everyone, welcome back to the Dental Wolf YouTube channel. So this is the third and last part of the basic financial statement series. So in this video, we're going to be talking about the cash flow statement. So the cash flow statement is the third statement of the three basic financial statements, which are income statement, balance sheet, and cash flow statement. So looking at this, it's probably going to seem pretty familiar to you if you've watched the income statement video. This cash flow statement is basically the same thing. If you look at this section right here, it's going to have all the same expenses, all the same cash disbursements is what we call it in a cash flow statement. The biggest difference in the cash flow statement between the cash flow statement and the income statement is this, that we're going to report the beginning cash balance of the practice and the remaining cash balance at the end. So we can kind of see how much cash we have coming into the time period and how much cash we have coming out of the time period. And so this way we can get a good sense of what the cash flow looks like. Are we netting cash flow or are we decreasing in cash flow? And cash flow statements won't be super important in valuations, but they'll be critical as you go into practice and you start managing the money in your practice. So just like the name might suggest, the main purpose of the cash flow statement is to observe and monitor the cash flowing in and out of your practice. And obviously you're going to want more cash flowing in than out, and that will help you avoid certain problems like bankruptcy.
I declare bankruptcy!
So the goal with the cash flow statement is to stay cash positive. So I know that was pretty short and simple, but there's a few more things I want to touch on before we wrap up the financial statement series. So just remember, we talked about income statements, balance sheets, and cash flow statements, and they all kind of work together. Now, they're all a little bit different, however, in their timeline, and we'll talk about that here in just a second. So when you're talking about balance sheets in particular, balance sheets are more of a snapshot. They represent a single moment in time. So I could say, on January 18th at 11:59 a.m., this is exactly what my balance sheet looked like. Whereas cash flow and income statements represent a period of time. So you have to specify the beginning and the end of the period. So giving you an example, you might have a cash flow and an income statement that would be for the year of 2018. Or you might have a balance sheet that says at the end of the month, or December 31st of 2018, this is what my balance sheet looked like. Equally, you could have cash flow statements and income statements that cover just single months or smaller periods of time, smaller than a year. And balance sheets don't always have to occur at the very end of a month or at the end of the year. They can occur anywhere in between. So what's important about this is that you understand when you do a valuation on a practice, you might be buying a practice in the middle of June. So you might get an income statement that reports income between January and May. And it's not going to look like the income statement that you got for the year before that. And that's because obviously it's covering a different amount of time. So it's not going to be the same amount of money. And typically when you go to value a practice or buy a practice, you're going to ask for the last 3 years of income statements so that you can get a rough idea of how the practice is doing. Well, I know that video was super short and the concepts were pretty simple, but I hope you enjoyed it. If you have any questions, please email us at dentalwolfonline.com or comment down below. Thanks.